A stock I'm watching right now is currently down 99.3% from its all-time highs of $151, sitting right around $1 right now. The headlines are brutal. Bankruptcy fears are everywhere. Most investors have completely written it off. The narrative just isn't there. This is the third time I have seen this exact setup. The first time was Palantir, which went from $5.84 to a high of $222, a gain of more than 3,700% or 37x. The second time was Carvana, which went from $355 to $486, a gain of more than 13,600% or 136. Both stocks launched those massive moves while the narrative was still overwhelmingly negative. In this video, I'm going to show you how the long-term charts of all three names put side by side and explain the common pattern using Weinstein Stage Analysis. The goal is not to predict the future, but to illustrate how price and market structure often lead the narrative rather than follow. The biggest edge in swing trading, and particularly in investing, is learning how to separate price from narrative. When the headlines are most negative and the crowd is most fearful, that is often when professional money is quietly accumulating, with the caveat that you're applying technical analysis to that stock. Palantir and Carvana both looked hopeless at their lows. Headlines screamed failure, valuation concerns dominated the news, and most investors had already moved on. Yet both launched massive moves while the story remained negative. Right now, we are seeing the same technical footprint again. Price is forming a stage one base while the narrative is at its most pessimistic. This is not about hoping a company survives. It's about recognizing when market structure is setting up a high reward opportunity after extreme pessimism. Before we hop into the charts, let's do a quick overview of Weinstein Stage Analysis. Now, if you're an investor, this is probably the one concept that you need to understand, along with maybe support and resistance, but that really has it baked into the Weinstein Stage Analysis. So Weinstein Stage Analysis divides price action into four repeatable stages that institutions tend to follow. Stage one is the base building phase. Price consolidates after a major decline, institutions quietly accumulate, and the narrative is usually at its most negative. Stage two is the advancing phase where the real move higher begins. Stage three is the topping phase, and stage four is the decline. Right now, the unnamed stock I mentioned is sitting in a textbook stage one base, the same stage Palantir and Carvana occupied just before their explosive moves, and it's offering up the best price it's ever offered. Let's take a look at our first example, which is Palantir. When you look back to the post-IPO days of Palantir, price IPO'd around $10 and had a quick run up to about $45. Then Palantir started to form a stage one base where it was quietly accumulating and even broke below support to reach a $5.84 price way back in January of 2023. Now, at the time, that's when headlines were negative. No one wanted to buy the stock. There was some concerns about their technology and just wasn't on anybody's mind anymore. It just seemed like another failed IPO. But fast forward to late last year, Palantir is one of the hottest names in the market. Like we mentioned, way up off of its highs to over $207. It actually hit $222 after hours on earnings. But this is a perfect example of building a stage one base into a stage two advance, into a stage three distribution pattern. And now it's experiencing its stage four with a target of about $50. But here, let's focus on just this run up here, because as investors and members of the Bison Blueprint community, we know how to exit these stocks at the top. So we're looking for opportunities to buy here on the similar pattern. Now, here's another example of Carvana. And this one's a much better example because it clearly shows the former stage one base, the breakout and run up to nearly $375, almost $400, and then another stage four breakdown where Carvana exited its meme mode during COVID and came back down to reality and almost went bankrupt right here at about $3.55. So let's zoom in on this base and see exactly what are we looking at here. You'll see that it established a base with a resistance around $20 and a support of around $3 to $4 with that mentioned 350 low. By the middle of 2023, it had broken above that base, started to consolidate, and then began its massive stage 2 run up all the way to $486, a huge gain, one of the biggest gains of the last couple of years in the stock market. So a perfect Weinstein Stage Analysis chart. But remember, when price was 355, no one wanted to buy Carvana. It was going into bankruptcy. People thought it was just a vending machine for cars. It's still not that particularly innovative, but for some reason, the market has pushed this up to nearly $500 here. And again, we're seeing our distribution and our phase 4 markdown, but here we're focusing on the ability to grow through these stages. And real quick, I just want to flash a couple of other examples on the screen that really illustrate this for us. Coinbase, we have our stage 4 building our base, $31 to $400. I think that's something like a 10 to 15x on Coinbase. Perfect chart. This is where we're sitting right now on this unnamed stock. DoorDash, same look, stage 4 breakdown, stage 1 base, stage 2 run up, stage 3 distribution, stage 4 breakdown. So we're looking to buy stocks in this same area. So now let's hop into the mystery stock. And this is Sleep Number Corporation. The ticker is SNBR. And as you can see, you have a very clear run up in the price into a stage 3 and then a stage 4 breakdown, which has been building a very long-term stage 1. Now, we had been tracking this name for quite some time and had a base resistance of around $20. We saw a base support of around $5 to $6. Due to some recent headlines around the bankruptcy, the war, downside in the S&P 500, kind of the perfect storm has been brewing for Sleep Number right now. And it's going through that $3.50 Palantir moment and that $5 Carvana moment where it's just getting crushed. Everything is turned against it. But that's where, as an investor, you can step into these names and get such a great return on this. So as we zoom in, we see that we're breaking out of this trend line. Everything looks terrible, but we're starting to get very oversold here at $1. In fact, price is already up 50 cents in the last couple of days, 50%. And just a move to $12 is a 12x on this stock, just to where it was a few months ago. So whether you want to play the whole move back to 151 is up to you, but this move to $12 is a simple 10x. So this is the exact pattern that we're looking for in this name. And right now, as you can see, there's some Sleep Number shares are trading lower after reports suggest the company is seeking an emergency loan. There's market chatter, seeks rescue financing, rescue loan, all that kind of stuff is really driving the price down here. And that's exactly where Carvana was in their news cycle. But I do want to mention, before you go out and buy this name, that this is a high risk, high reward setup. This is not something like Apple or Google where the company is not going to go away anytime soon. There is some downside risk to this still. So treat it like that as a high risk position, put a small amount of money in and treat it like you might a parlay or something just to see how this works out. But the risk reward setup is incredible here. And remember, never go all in on a single name. Proper position sizing and strict risk management are essential. And again, this is a 2 to 5 year play. You're not going to see something immediate on this. So don't reach out and wonder, should I sell at 50 cents? Should I sell at 75 cents? This is a buy and hold and wait and see if it can get back to these numbers. You basically have to put in an amount that you're comfortable going to zero. And the reward here comes from the asymmetry. So when these resolve higher after extreme pessimism, the move can be very big. And again, this is a classic example of using market structure and price action as the primary filter instead of the daily narrative. This is an exaggerated example, but this setup happens all the time with 5x, 20x opportunities across different names and different sectors when you know how to spot them. Inside the Bison Blueprint, we look specifically for the same stage one base setup and confluences across all instruments and industries. If you're tired of letting negative headlines dictate your investment decisions and want to learn how to read market structure and price action the way institutions do, the Bison Blueprint Discord was built for exactly that. Inside, you receive the full confluence checklist, daily watch lists already filtered through it, live office hours, direct chart reviews with me, and best of all, my live entries and exits on both swing trades and long-term investments. Again, price action and market structure are the most reliable tools for any time frame. A mechanical checklist that forces confluences between these elements turns trading from emotional guesswork into a repeatable, reviewable process. The community is for serious traders and investors who value structure, process, and long-term skill development over hype. The link to join is in the description below. I look forward to seeing you inside.